Good morning, it's Brian Egger from Breaking Call on December 19th. The shares of Carnival, CCL, are up about 3% this morning after the company reported its fiscal fourth November quarter. And this appears to be a reasonable trading reaction in view of a somewhat more encouraging near-term outlook for the company. As my colleague Mike Andrade will discuss in a moment, the stock's technicals are actually consistent with an ongoing uptrend. However, one note of caution on the fundamentals. At its current price relative to the midpoint of 2014 guidance, Carnival's forward PE is about 24 times in the top quarter of its historical range. Moderation in fuel costs and slower supply growth suggest that may be a reasonable valuation level, but it's not cheap from a historical perspective. Two observations about the results. Number one, on the fourth quarter, CCL earned 4 cents on a 2% net revenue decline in constant dollars. That was a little better than the break-even level of consensus and the midpoint of guidance, which had assumed a 3 to 4% yield decline. Number two, on the 2014 outlook, Carnival is looking for EPS in a range of $1.40 to $1.80 on yields that will be down slightly. Now, this first-time announcement of 2014 guidance appears to affirm the $1.59 consensus. It's consistent with more general comments about yield trends made back in September. I'll now turn it over to my colleague, Mike Andrade, who will discuss the technicals for Carnival.
Thanks, Brian. Now we will look at the charts for Carnival Corp. The stock has traded up as much as 3% this morning on the earnings beat. Our last technical look in September highlighted an uptrend in force since October of 2011. The series of higher lows in the uptrend has been sustained despite a recent brief dip to a significant low in October at $31.44. A strong reaction ensued from that level, and we now have upside momentum building in what should be another rally leg up over the next few weeks. Today's action remains consistent with our prior analysis and appears appropriate in the context of recent technical and fundamental developments. Looking first at the weekly chart, we see a bullish trend channel with the most recent move contained in the range between 38.04 and the low of 31.44 that is now key intermediate support. Today's gap up is now testing recent resistance, and we are looking for follow-through above the recent 38.04 high. We are looking for higher lows and for the stock to gravitate toward technical resistance at the December 2012 high near 39.95 and ultimately a retest of major gap and trendline resistance near $45. A quick look at the daily chart shows us near-term support at the gap up near 37.15 and then intermediate support in the 34.70 to 35.70 band. Resistance first appears at the December high of $39.95. Closes above that level suggest a retest of $45.